Divergence on the TSI or the histogram?
What was the question?
Can you spot divergence on the TSI or the histogram?
I strictly use the TSI, the bands. I don't use a histogram. Reason I use the histogram is I just like to see it just shows me the direction of the bars over here too. You can see them, here going down. Let me darken this up a little bit. So, I mean, this way you can see that a little bit better. There you go. And there. So, here you can just see like the bar direction as it goes down, and over here as it goes up, that it's starting to move up right through here. This is down, this is up. So it's pretty sensitive to my settings, but I just like to look at that as price is moving. So it's just I'm a very visual person, so this just gives me extra support as I trade when I do see the histogram. So for me, I don't need it to be this bold. That's why I just kind of lighten it down a little bit. As long as I can just kind of see the shadow in the background, that's good enough for me. But in terms of divergences, I strictly just use the blue band on my TSI. I go off of the blue band on the TSI. So um, let's see if we can spot one, right here. See this one right here was a nice divergence, going down, and everybody has the charts. I'm sure Roxie had posted some today, and you've seen them in the past too, but maybe Roxy, maybe afterwards you can just put a couple of charts up once again, like in
Yeah,
the members area,
yeah. I
so
I do post a daily one, sometimes including the 5 minute time frame, but I trade
yeah,
the 1 minute. So,
yeah,
but guys, divergences, it's not time frame dependent. You're going to find these on every single time frame.
yeah. Any market, it works on Forex, it works on stocks, on cryptocurrencies. You're gonna find these everywhere. They're just posted everywhere. So, you know, do yourself a favor and please practice. Please practice these, because it's a really, really good way of making a little bit of profit, once you spot these things. So here you can see this. This is bullish, you know. I've said this many times. Whenever there's a divergence on here, it's like the market is telling you there's free money around the corner, and that's basically what's happening. It's like you spot the divergence and you're going to get into profit, So once you understand the pattern of this, then it's going to become so much easier. You train your eye. So spend time at night, maybe 10, 15 minutes, just looking out for divergences. It's a great way to make some profit. And when you do this, you can, if you do spot one, you can still use your, your level, I mean, your indicators here to take your entry, so let's do that. I sometimes am a little bit more aggressive on my entries. I do have a little bit more experience. I told Roxy about my today's experience, but that's a whole other story. But but actually, it
Yeah,
did
so
come
if you see
through.
some of his posts in the testimonies where he's showing the profit that
Yeah,
he took, his entries will be sometimes in those wicks, for example, of the base of that
yeah,
reversal.
yeah, yeah,
And yes, the indicators haven't lined up at that point in time. He is more experienced and therefore is watching for things like price movement in that area,
yeah,
consolidation. He's looking for things that over time, as you practice and get more used to how the market flows, you too can watch for those. Safest thing right now, though, is to absolutely wait for your indicators to give you a signal. Wait for it to confirm it.
Absolutely. So wait for your indicators, you know. So like when I used to practice all of this, you know, even before I learned divergence and I just wanted to follow my indicators, you know, I would just take my line tool, you know, if you hold the control key down and you pick up on these points, you know, or I mean, sorry, off the points, you can it duplicates that line for you, you know, so that I would just move it to my next point. So this is a good way of practicing and keeping, you know, just training your eye when you do spot these certain areas. Even if it's kind of like, I mean, this is in hindsight here, so you see that this really didn't work out so well here. Doesn't matter. Just mark off that those areas where if it's going long, make sure it's green, make sure this is cross going upwards, you get a long position. If it's going short, the opposite way. If it's going long, do the same thing. And then I would sit there and I would do this, when I finish this page, I just go to a whole new page over here, do the same thing, do the same thing over here.
Right.
Just practice your entry,
So a couple common
practice.
questions, and guys, please do post questions in the members chat. We'll be working to answer those. So a couple common questions that I get is, do you take every trade where the LMI crosses and things line up? And the answer is absolutely not. I do not take every trade. I try to build confluences by having divergences or trading with the trend or things like that that will help you to narrow in on better entries. Taking every entry can get to be a little bit choppy, such as that area that he was just highlighting over there, where the
Right
market
here.
is rapidly moving up and down. You can take a lot of losses in that. And
Yeah, this is, yeah,
the best way that I have absolutely found is two things. Have support and resistance drawn so that you can look to take a trade from a support or resistance zone, preferably in the trend direction. Those two things will help you to get a much better entry and take a much better entry off of your indicators when they line up. Anyways,
yes.
just wanted to chime that in there. The second
No,
thing
no,
that I
that's
frequently
great.
get is, do all divergences play out? And the answer is no. Not all divergences will play out to the same degree. So likely when you see a divergence, you'll see something where it played out a couple, 3 bars. Usually that's because there's enough momentum at, say, a higher time frame overall that it's going to continue with the trend until it hits another support zone or resistance zone. So they're wonderful and absolutely free, basically free money. They're truly great. I am typically looking for those to play out from, again, a major support or resistance zone. So
Yeah.
I just add to that question.
Mhm.
When you say in direction of the trend, so obviously there's several trends, but which primarily is the trend you're looking at? Like how far would
Yeah.
you go?
yeah,
Yeah.
so
This is
if I'm,
one right here
I'm
is a
sorry, go
good
ahead.
example right here. Go ahead, Roxy.
Yeah, so in answer to that, I am typically looking 15-minute and 5-minute. I will draw trend lines from a 1 hour to give me an overall idea of the direction it's going. But since I trade the 1 minute, I'm looking to 5-minute or 15-minute to give me trend direction. Does that make sense?
Great, thank you.
Yeah.
Yeah. Yeah, right here. I mean, this is the EMA, the 144 right here. So if you are taking a trade, this is like trading 101, trade in the direction of the trend. Don't counter trend. I like to counter trend trade because, I'm really used to it and a little bit more experience with it. And if you do counter trend trade, you are going against the trend, right here. And just be aware that you pretty much have to go in and out because, I mean, here actually the yellow bars went up a little bit, so that's not so bad, but you could run into a situation where, maybe like right here, the bars just go up, 2 bars, and then you're thinking it's going to go up, and next thing you know, the market goes against you. So It's always safer to take the trade with the trend because you get more bars in your favor, as you see right here. You know, and as you see right here, and as you see right here. So, you know, that's why I have the EMA, the 144. And, you know, you can even do like a manual line, you know, use your ray tool, and you can create your own line right here, and it just kind of shows you the direction of where the trend is going. And when it finally breaks, you know that it can, you have a high probability of it going the other direction right here. So the interesting thing about this is there is a divergence right here, right with the trend. You can see it. You know, this is, you know, price is making lower highs right here, and over here, on my oscillator, the right side of the TSI is higher than the left side. You know, so and that pattern right here tells me that price is going to move down. So, you know, and then once, you know, you get your signal, you know, you just take, you know, take your trade. And, you know, since you're going with the trend, you know, you have a higher probability of getting better profit than going counter trend on it. So,
Absolutely. So another immediate question is where do you take profit at? How do you know when to do that?
okay. So when I trade the NQ, for me, the NQ is a big money maker. You know, it does move fast. You know, Brutus can tell you the same thing on the indices side. It's a great indicator, but going to where I take profit at is I basically base mine off of market structure. You know, I know a lot of you like to use this as a guide if you are getting in right here. You know, you could put your stop right above the last swing high, and you set your risk reward to like one to 1.5, you know, which is like, you know, about right. Sorry, it's kind of hard to get those sometimes. About right there. So, and you make pretty good profit right here. You got 30 points on the NQ. So if I were to get in right here, well, first off, I would have had my support resistance drawn in, you know, which would have been right here. And, you know, always looking to the left. This is, you know, right here, these wicks dropping right here. This to me would have been another level about right here. So I would have these ready, set, go, and I would kind of base my profit off of where that next level was right here. So I would really be looking here and definitely down here if I really wanted it to run. And, you know, eventually it would have hit it. You know, if I had set my target, you know, at least lower down in here, you know, that would have been like a, you know, 1 to 3 or so. But definitely, you know, I just follow market structure. That's how I do it. But if you're more comfortable in, you know, collecting a 1-to-1 or 1-to-1.5 or 1-to-2, then by all means, just use this. I was showing somebody yesterday, you know, you could also use, you know, ATR and base your stop loss off of that, you know, if you wanted to do that too. But for me, it's just always easier just to go to the last swing high on the wicks right here, and then you know you know just kind of regulate your risk reward that way. So, and which Roxy does, you see it on her charts. You know, Roxy, you take, was it 1 to 1.5? Is it
Sorry, no, I trade structurally the same way.
okay?
So some of those are uh, 1 to 1.5, some are 1 to 3. It just kind of depends on how far I think I can hold it. just based on the
Okay.
next structure zone. So, but my profits, I used to try to do a 1 to 2 risk reward, but more often than not, it would turn around on me because of my entry or what have you. And it was, especially the time frame I'm trading, it's much better to secure profits and to know that, hey, it's probably going to bounce off the zone. If it bounces there but is able to break through it, great. I've got another entry and I continue on rather than having it completely reverse on me and losing out. So typically from a structure point that I've identified in advance. So.
Perfect. Perfect. I want to show you guys, I want to find a good example of it. Is sometimes, you know, everybody knows that trends don't always go the same way. They don't, you know, they eventually will end. So, you know, here's a really nice one right here. It's a good example. You know, so here you've had the market going up for a while. Right here, you can really see it going up. At some point, it's going to end. You know, so a lot of times you will find a divergence right at the area where the market switches from, you know, in this case, from long to short. You know, so that's another really good way of identifying or just keeping an eye out. You know, so divergences can happen anywhere within this whole trend. You know, even if you're moving, you know, sideways a little bit, it can happen. But, you know, a lot of times, you know, you get it more than less that you will find a divergence right before change of trend direction. So be on the lookout for that too. And, you know, in this case, this was a, you know, a really nice one. You know, you had momentum dropping down on you here. So, you know, all the sellers came into play. And even though the crossing on here was literally like right there, you know, you just wait for your LMI to turn red, and then that's where you would have been taking your trade right here, and then you can set your uh, you know, your risk reward, you know, as you see fit, you know, whether if it's like 1.5, you know, that's fine. And that would have been like right there, and you would have gotten profit. So, yeah, it's really a nice way of, you know, making some profit. You know, you have high probability that it will go your way than less. You know, but just remember, everybody, there's no certainty in trading. You know, it's only probabilities. So, um, always keep that in the back of your heads too. So,
So one of the nice things about Hawks's
mhm.
system here, Andy's system, is that it is just following market flow, market structure, price action. So it can be applied to any market. So he is showing you the NQ, but you can trade this on the currency pairs or directly on the indice itself. It's not limited to what you see typically the charts that I'm posting in Q. That's just the market that I'm used to trading. I posted another one today that was off of the Dow, which in this case for futures is YM.
Yeah, you know, here I can even go to one here. Here's another one right there. This is the USD, like the US Swiss, right? Roxy, this is what that is?
Yep, that's what it is.
Yeah, so this is a Forex pair, and you can find divergences right in here. You know, it's like, look at that. Here's one right there. You know, here's one right there. And look at that. You made nice profit. So this is what I'm talking about right here. See, this stopped right there. So it's picking up on the resistance level to the left, and now it's becoming a support level. And actually, you can follow this through a little bit more. So this is a really nice, nice little zone right here. So that's why I'm just saying you should always just pay attention to these. I just don't trade divergences. Obviously, you use the LMI method with the TSI crossover, and you can get in. And if you do go with the trend, then it's in your favor, as you see right here. This is going with the trend right here. So you have a really nice entry, right here. Let me just change this color to red. Right here, you have another, if you're going with the trend, you have another nice entry right there. Continuing once again, going with the trend, that would have been right there. That would have been a little one. So I'm always careful when I do take that trade, when price does come down, I look left, oops, right there. Price comes down, I look left. That's where I stop. Same thing over here. Price comes down, I look to the left, and that gives me my area where I'm going to stop right here, because in this case, as you can see here, price came down for a very long time, and it consolidated right here. But price isn't going to go down forever. At some point, it is going to go up. And in this case here, you have that big gap right here. So, I showed this in my other videos where you do find these gaps, price is going to come right back up to that EMA. So, here you can really see price exhaustion right here. You saw a little bit right there, but this finally was the tail end of it before price started to move a little bit. It really wants to go up, but the EMA is pushing it down. So, you do use this EMA as a support and resistance level as well. So in theory, price is bouncing between the EMA right here, and it's also bouncing off of this support level right down here. So always look to the left, when you
Yeah.
trade.
And I hope you all
So,
can see the importance of getting good at support and resistance and identifying key areas looking to the left. This system does work best with that knowledge and with that drawn out on your charts. That type of analysis really increases the likelihood that you will take a good entry.
yeah, always
So
use, eventually you want to use market structure as your way of knowing where price may stop and where you can enter. I like to use my indicators as a guide just to kind of point me in a general direction, but
confirmation,
that's why, what was that?
confirmation, right?
Yeah, exactly. So as good confirmation right here. So, um, but once you really get comfortable with price action and the market structure, then trading just becomes a little bit easier, and it actually becomes fun because you're not sitting here stressing out to, oh my God, I just took this trade. What's going to happen now? You have a better understanding of what can happen versus, oh, is this really what's going to happen, or is something else going to happen? You don't second guess yourself.
So
So,
speaking of second
mhm,
guessing, we had a question come through that I believe is relevant here.
sure.
Basically, you have the question of if we're in a trade, basically, and it's going one direction, and we spot a divergence TSI cross that's the opposite direction, before we've hit our take profit, do we exit at that point in time or and try to go the opposite direction, or do we stay in with the trade that we're in and wait for our take profit?
Well, you do find a lot of divergences that kind of piggyback each other too. So when you see something like, and I think I understand that question correctly. When you do see something like that, it's usually one will form before the other forms. But when you do see it like in hindsight, it makes you think like, well, which one do I take first? Do I take this one first, or do I take another one first? I'm trying to see if I can find an example over here. I don't, but it's usually one will form before the other one forms. So I hope that answers that question. You know, if you find an example, please send me a DM or send Roxie a DM with an image. You know, we just want to make sure that you understand that right. But there has been times where you do find divergences one on top of the other. But, you know, before the second one happens, you got to take the first one. So in this case, I don't see one. As we scroll along here, I'll see if I can spot something like that, you know? So just trying to see. Well, you know what? Here, let me take a look here real fast. Let me delete this. Let me see if this is one right here. Let me see. So this one is going down right there. Yeah, that's going up. There's a divergence right there to take that one down. So, and then let me see. Yeah, see, I thought that was the
If
one
there are
that
any
wasn't
questions, please post them in
right
the
there.
members chat area.
Yeah. So, so this right now we are on the 1 minute time frame, you know, so this works on any time frame. Of course, there's actually, you know, a little bit more market noise on here. So the really cool thing about the 1 minute time frame is that, you know, from when the day starts, you do have many opportunities to take a trade. So this right here is the start of, I'm just going to make that dotted. That's the start of the New York session. It's 8:30 Central Standard Time. And look how many opportunities you have to take trades throughout the day, you know, but you are going to get more noise in
There was a
here,
nice
you know.
opening divergence. You can show them, go
Yeah, there
back.
was. Yeah, right over here,
Yeah.
you know. So there's one right there, one right there. I mean, look at that. And that thing just like really dropped. You know, when you do see something like that, you know, this is a good example. Like if I'm going to take my, you know, I could take profit one, my EMA line is right there. So you can use that as your level of take profit if you wanted to. I do see these little drops right here. These are really prominent that stand out, you know, and that's the end right there. So, you know, you can just follow along and take profit two or take profit three if you want, if you have like a runner, you know, or just bypass this middle one and just go right towards the end right here. So these are where your take profit one and take profit two would be. So, and once again, folks, as you do take this trade, as price goes down, you know, look to the left, right there, you know, because that will always let you know what's happening with price, you know,
And another
so
thing, you absolutely will leave money on the table. That happens, and
yeah.
that's a-okay. It's better to secure your profits than to have it completely reverse on you and get nothing. You'll get better at holding the trades, longer as you get more used to reading the market. And that'll increase how much profit you can make. But I don't know about you guys, but I'd rather make $200 than lose $200. So,
It, you make anything, $60, $100, it's better to do that. But the important thing is first, for those that are newer to trading, is to make sure you understand what's happening in the process. You know, if you really start to focus on how much money you're going to make off of each trade, then that's going to be on your head. You know, if you do the process correctly, the money is the incentive. It's going to be there for you. You know, I mean, we are all trading to make money. We're not learning the market to spot divergences and just learn how to do things on, you know, with actual price action. we're doing this so we can make money. So before you can make money, you need to understand the process. Once you understand that, the incentive is the money. You know, it's you don't
The
make the
reward.
money,
The
is
reward
the
is the money.
reward. You know, the market gives you that money, you know, so that's what you take out of that. So, yeah. Does anybody have another question?
Yeah, there is another question came through in the members chat. I'm going to go ahead and read it for you.
Awesome.
Max Dom says, "Hey, what could be a way to avoid a false trend reversal, like in these divergences?"
That would be is if you're going against the trend, actually. And that does happen. Here's look at this. Here's a
All
good
the time.
example right here. Here's
If
a
it's
good
a strong
example. Look at
trend,
that.
it will throw counter
Yeah.
trend divergences a lot.
So here's perfect timing for that question.
Yep,
Right here. Here's
exactly.
the divergence. And then all of a sudden you're like, oh wow, it's starting to go down. You know, I'm gonna take this trade. You get too excited, but look, there's no LMI. I mean, this crossed to go down, but pay attention to your indicator too, because even though it crossed here, the LMI here never turned red right here. So in theory, this is like a false divergence right here, because it ended shooting up a little bit higher. So price wasn't really done moving until up here. And in that case, that that was the divergence right there. That was straight right here because it went from the top of the blue line to the top of this blue line, and this is where it finally took place. So that's why it's important to watch, you know, both your indicators to make sure.
Yep.
So, but
But
that was just
sometimes
like
you'll see on
yeah,
some of my charts, so that indicator would have dipped below the line, but then immediately pops back up again. It
yeah,
will do that, and you will, if you took it, take a loss. But the point is
yeah,
that you'll have other opportunities to make that back. In trading, you're going to have wins and you're going to have losses.
yeah,
The best
yeah,
you can do is to try to build enough confluences to give yourself much better entries.
yeah. So these patterns you find everywhere, you know. So you know, there's more patterns than divergences. There's also head and shoulders patterns. There's double tops, double bottoms. There's a lot of pennants and flags, you
So
know,
part
and
of what
we'll
we wanted
start.
to show was
Yeah,
patterns, Andy. Can we find a couple double top, double bottoms to start us out?
yeah. Well, this one was kind of close, you know. So this one can pass for like a double top right there. You know, basically it's you pretty much want to have price coming up pretty much at the same level, but this can easily pass for a double top right here, you know. Um, that's a nice one. That's a nice one. I want to show you guys a really cool pattern that's forming right here. This is the Nasdaq, the NQ. This is one that you really got to zoom out a little. Sorry, it's, you know, these are just my borders. But look at this pattern, people. This pattern is, who can guess what this pattern is?
Video's a
Anybody?
little laggy, so give him a second.
Yeah. Check this out, people. I think that's about right there. And I do this again.
You've got an answer. Sam says it's a cup and handle.
Yeah, it's an inverted cup and handle right here. You see that? This is upside down. This is the cup upside down, and that's the little handle coming down right there. So this is another great pattern that's out there. So this is why it's always good when you trade to zoom out on your charts. You know, a lot of people just really like to open up their charts in the morning and they're right here, you know, but if you open up your chart, zoom out a little bit, sometimes you can find really cool patterns like this. So I really wanted to point that out. You don't see this every day, but you do see it at times. You know, the handle can even be on the other side, but in this case, it's right over here. So somebody sent a question here saying you can see one inside the cup. So is there another cup and handle inside the cup? Are you referring to this right here, maybe? I don't know. Maybe send us a screenshot of that. You know, let us know what you think. But I really wanted to point that out. So,
Thanks for sharing
all
that.
right. So, yeah.
So one
So,
note real quick before you move on too far. So he
yeah,
showed that double top, and it wasn't necessarily the candle bodies he was using. He was showing that price hit multiple times at that same level, and that's the equivalent of a double top as well. It's not always an
yeah,
exact match to bodies of a candle. I just want to
yeah.
highlight that.
Cool. There we go. Yeah, you have like double tops. Sometimes you do get, I want to try to find like a pennant. You know, here's another double top right here. You know, that's a reversal pattern. Head and shoulders are popular, you know, so
So hold on,
though,
I want to use that one as an example real quick here. So we talk
okay,
about building confluences. So for example, that one created a double top, and then you had a divergence with it as well. So there you go, that's two confluences for taking the trade. It is also distended away from the 144, and as Hawks said in his previous videos, it likes to try to come back to the 144. So you know that with that void there, there's a good chance that it's has to execute back to the 144
yeah,
or nearest zone.
especially on the divergence right over here too, as it'll drop down. So that's yeah, that's pretty good. Thanks for pointing that out. That's pretty cool. You know, but look,
Wondering why they want 44 and not the 200 give me.
well, you could use a 200. I'm just used to the 144. 144 is a fib number, so um, I just like it. I saw it in a video a long time ago, so I just stuck with it. You know, so you can try this with 200, or if you want to try this with a you know, with a 50, whatever you feel more comfortable with. You know, I know if a lot of you watch Artie's videos, he uses the smooth average, moving averages, which I think are like 50, is it 100 and 200? You know, so a lot of people like to use those. I see those in charts also. So whatever you feel is what you like, then you can use that. I just don't like to have a lot of lines on my chart, and I feel comfortable with the 144. So it's been working out really good for me, and I'm sticking to that one.
Okay, thanks.
Yeah. So let's see if we can spot like a head and shoulders, and there's always like the M's and the W's, you know, which are like double tops, you know, like you see right here, you got like an M pattern, but here it's just taken off with the trend, you know, so I don't see, you have another nice divergence right over here, you know, to the downside, you know, and that's really nice right here. You know, I really want to find a head and shoulders pattern. I want to show you if I can see one. But what are some patterns that you found recently that you don't really see every day? There's quite a few. I mean, here's a really, really nice obvious divergence right here. You know, and then this one went straight down. You know, I mean,
I was
there's
gonna say
more
on
right
a couple of my recent charts, I noted a few wedge patterns that were occurring on the 1 minute. So those are pretty
Okay.
common and easy to spot.
Yeah, well, yeah, we are on the 1 minute right here. So let's see if we can find any wedges or flags. Actually, I think this one, yeah, this right here is a nice flag pattern right there. So this one here is ascending downwards, this flag pattern. So this is the flagpole and this is the flag, and then obviously this will shoot straight up right here. So that's a nice flag pattern right here. Yeah, don't mistaken it for like a retracement like that. You know, I mean, this has some movement in here, up and down, and then finally it shoots up. Let's see. Really looking for that head and well, here we go. This right here is a little odd shape, but this is a head and shoulders pattern right here, where you have the left shoulder, you have the head, and then you have the right shoulder. That's a reversal pattern. And it went to the downside, but since you have your EMA here, it stopped it from going, lower. But this is a nice head and shoulders pattern right here. And you can find these also inverted if they're upside down. Some might even say this can be a head and shoulders pattern too, because you do have a prominent left shoulder, this point right here. Okay, and then you have your head here, and then you have your other shoulder, and it's a reversal pattern. It goes up. So that's like a double whammy right here then. You got it here, then you have it up here too. Look at that. So any wedge patterns? Anyone see anything? Let's try like a higher time frame too. You don't always have to stick to a lower time frame. You can find these patterns in any time frame. So you just have to keep looking for them. There's a lot of charts on various patterns, Roxy. Maybe you can find some of those charts and we can post those up, because it's really interesting how price action forms these patterns and can really help you as you trade. I love to look for patterns, so here's like another, head and shoulders pattern. It's an inverted pattern right here. You have your left shoulder, you have your head, and then you have your right shoulder, and then it shoots up right over here. So keep spotting those. These are the more popular ones, are your head and shoulders patterns.
So the video was lagging a bit there. Can you just jump back real quick? It was right there.
Yeah,
Okay.
yeah. So this is an inverted head and shoulders. You have your left shoulder, you have your head, and you have your right shoulder, and it's a nice reversal pattern to the top side right here. So that's something really nice. And there's also divergence on here too. So you have so much confirmation in these charts, to what could be happening in the future. This is why it's so important to always look to the left. Look at this. You have a nice divergence to the top side, and then when it finally made this point going up, you start identifying this as a head and shoulders pattern, and it actually took off. It did what it's supposed to do. It's a nice reversal pattern to the top side, and then again, it just kind of danced around the 144 again before it just moved up a little bit more. So there we go. Trying to find a nice wedge pattern, you know, but we'll see. Any other question? Oh, here's a nice little pendant, you know. So this is what we're talking about, triangles and wedges, you know. So you have something like this. You see that? You know, these patterns, when you do find a wedge, an ascending triangle or a symmetrical triangle or a pennant, these are very powerful because what's happening here is that price is bouncing between these lines and then finally it just like explodes out, you know, and that's what usually will happen. So think of these patterns as a spring, you know. So what happens when you compress that spring? You know, when you release it, the spring just takes off. Same thing here. Price is being compressed within this triangular pattern, and then it can't hold anymore, and then it just like takes off. So that's what happens here. So this is a really good example of one right here. So this is a symmetrical triangle. So
If you're
that's
not
one right there.
looking to ask a question, please keep yourself muted. Thank you.
Yeah, thank you.
Doggy.
This is like a lot of chop right over here. So stuff that you really want to avoid. Yeah, not seeing much of these patterns here. Maybe we can try it again. You know, maybe on the NQ it can have, I mean, I see these patterns here like all the time. Let me try like a 5-minute chart. I'll just clear this up. But you can find a lot of these patterns in here too. A lot of these wedges and triangles.
Excuse me, what would you say the difference between the TSI and the stochastic?
The stochastic RSI.
Yeah.
Okay, let's take a look here.
Yeah, he's asking the differences. So one of the main things that Andy highlights with why he uses the TSI is because the stochastic RSI will become overbought or oversold, and then it flatlines. Yeah, there you go.
Yeah, it'll flatline at 100 right here, and at 0 it just goes straight, you know. And to me, that just kind of just confuses me a little bit. You know, there's nothing wrong with people using this. I mean, you can, by all means, if you're very comfortable using this, it can still work. But I just find it, you know, a little bit easier to use that, you know, especially if there's like a divergence of some sort, you know, it just makes things a little bit easier for me to spot, you know. So and then I don't get these flat areas at the top and at the bottom. You know, I mean, here you do get the nice oversold, overbought area, you know, which isn't, it's not bad, you know, but whenever this happens, it just, you know, doesn't sit well with me at least, you know. So um, you know, these are more free forming and it works
Yeah,
really nice. So
oh, yeah,
yeah,
I can see
that
that.
yeah, can you see that? You know, that's one of the reasons that I like using the TSI. So
Okay.
yeah, that's pretty cool. Um, any other questions anyone might have? Or is anything that you want to see, like a certain chart, or you know, we could take a look at something?
Sorry, so one of the questions that came through was the triangle, is it for continuation or reversal?
The triangle.
Yeah, so when you were putting in
Oh,
that
like
wedge
a,
or a triangle
okay.
shape,
Oh, that
they're
wedge.
wanting to know, is that primarily going to be something they're watching for reversal from or
Yeah.
continuation?
Well, it's both too. You can find them as continuation and you can find them as a reversal. Yeah, we'll find some sheets and they have the ascending triangle, descending triangle, and those patterns are very helpful, and some continue and then some go the opposite way. So that's why I'm just really trying to find some of these things right here. If I can spot one. So this is another head and shoulders pattern right here. The left shoulder, that's the head, and then that's the right shoulder, and then that's reversal pattern. It drop down right there. So always on the lookout for that. You
And
know,
at least what I've found on the 1 minute, like if I'm seeing a wedge forming, if it's a big enough wedge, I can trade back and forth off the top and bottom of it. But
oh
one
yeah,
thing to note, and I have noted it in several charts, I call them fake and break. So it likes to kind of jump above the wedge before heading down again. Is really not uncommon. It's retesting a low point before continuing on in the opposite direction, that type of thing. So when you see something, know that it is not uncommon for it to essentially fake one direction and break the other out of it. Or at least
yeah.
I'm running into that on the 1 minute with some regularity. So
No, that's yeah, no, that's a good point. You know, I mean, this is an interesting. This is like, I mean, like, look at this thing. This just kind of like did a nice little zigzaggedy pattern in here, and then just kind of, you know, continued on out right through here, and came to the downside right there. So that's like another triangle pattern right there. So
So, Andy, I've had a couple pings again. Support and resistance. We kind of started in on that and didn't
yeah,
complete it all the way. Can we just take the NQ for example and drop
sure,
or go up to a higher time frame and just work our way down real quick on how we would go about it?
absolutely, yeah. So we can do that. So let's just go to the 4 hour time frame right here. We'll start at the end right here. So, and I urge everybody to practice this, so um like let's say this was almost, if the morning opening candle was about to start and you're getting up and you want to start setting your chart, I would right off the bat, you can set up your key level up on the top, down here. This could be an area right over here. These wicks are touching this down here. And then I would put another key level right here. Okay. So from there, I will go down to my 1 hour. And these are the levels. So you can really see where, price has touched this area multiple times. And it's always best if you do find a zone area that's got support and resistance on it. That means it's getting very well respected throughout, but then again, you have areas like this where you just, even if you continue it this way, you have it in one direction, but that's okay. So when I do go to my one hour time frame here, I can make adjustments if I wanted to. You can shift these up or down a little bit as you see fit, and if I'm happy with what I see, then I'll go down to my 15-minute time frame right here, you have a little bit more detail. And here you can add, you know, any additional levels that you want, you know, some like smaller mid-levels, you know, and these are really good because, I mean, these are for obvious choices, you know, price came here, bounced off, you know, bounced off right here. So right now price is here, so we don't know, is it going to continue down or is it going to continue up? If it continues down, I know I have this area down here, but that's a long area for it just to go straight down. It's probably going to hit off of something. I do want to point out, whenever you do see these like hanging wicks like this, you know, for some reason price is also attracted to these little areas like that, you know, so I always try to cover those up as well, you know, so, you know,
Yeah,
you
it's
have an
usually trying
area
to
right here.
fill orders that weren't filled at the time. It moved very quickly in and out of
Yes.
that zone. So
Yeah. You know, so, you know what, this right here can be a nice, another little, well, that was like the cup and handle we were looking at, you know, but this looks like it's, you know, we were looking at one that was like way further out. This is like the handle of it, but like over here, this is another like little inverted cup and handle right here. Isn't that interesting? Hmm, pretty cool. See, once you're familiar with these patterns, your eye just like sees these things automatically. So it's like looking at the clouds and you find a, you know, like a rabbit or something, you know, so
that's funny. Um,
so
I'd say best bang for your buck is to learn divergences first.
yeah. But you know, once you really, you know, have your level set in here, you know, like now I'm back at the 5 minute time frame, so you know, you can set up these little levels in here too, because here you can really see, you know, price bouncing from area to area now. And you obviously have to leave room for price to move in between. You can't sit there and obviously hit every little support and resistance level. I mean, that's just going to drive your brain crazy because, and it's going to just crowd the chart and it's going to cloud your brain if you see all these little lines. So if you have areas that are pretty nicely spread, that you can really see how where price started and where price is ending, you know, this is a really nice way to mark your support and resistance areas, you know. So and then from
As
here,
an add-on
yeah,
there, I would note that I color code them so that I know if I was zoomed out and I was, say, on a 1 hour and I drew in a support and resistance zone, I mark those with a particular color because I want to know that that was a zone that is from a much higher time frame. It's
yeah,
a particular area of interest for me because it's likely to have some strong movement at that area. So great tip is just as you drill down and add more, color code them so that you know, okay, red, that was perfect 1 hour, green, perfect, that's, you know, 15-minute or 5-minute or something like that. And just
yeah,
develop a scheme that helps you out.
exactly. This is the way to go with it, you know. Roxy's correct. Color coding, you could just identify your key levels to a more mid-level type area right here. So um, I think, yeah, I think this is it for support and resistance. I mean, I don't go, I mean, if I'm trading on a 5, that's it for me. And then I just wait until my indicators kick in, or if I see a divergence, then I'll plan on when to take the trade or where to take the trade, you know, so, but it's just really
Yeah, and
important that
correct me if I'm wrong, one of the ones you took today was from that green support zone with the divergence, correct?
I did take one from there. Yeah, yeah. This for sure. Right over here, I believe. You know, I just went right up. or was it over here on this side? I think it may have, you know what? I think it was right here.
It was in the middle. It
Yeah,
was almost that
like somewhere in
double
here.
bottom there, that W.
Yeah, you know what? It was in here, actually. I went in a little bit early right here and to go up and went against me a little bit, but it bounced off and I think I got out over here. I had like 3 contracts on that one, so that one did fairly well.
Yeah. Video's lagging a little
So,
bit, just to warn you.
okay. So yeah, that's where I took one of my, I think I had like 2 or 3, couple of trades here today. So, um, but yeah, this one, man, just like really just took a plunge. Just really, really dove down, and here you might think that price is going to move back up, but, obviously bounced off of the EMA 144 and came right back down to this level. So what happens next, is up to the market. It may go up or it may go down. I'm not really sure. So
But
any other,
I think what I was
yeah,
trying to point out there, sorry, it's not, the video's now catching up, was that from those two zones, I want to highlight 2 great trades that were there. The double bottom W that was formed in the middle
right here.
that had a divergence on it right there. And then once it reached that upper zone, it had another divergence as well. Yep,
Yeah,
there you go, perfect.
you had a nice divergence right here.
Hmm.
You had a nice one right there. And then you could ride that one straight up right there.
Yep.
And then you had another nice one right here. And you had another nice one right there. And then this one, you can just ride that straight down. So you
And
did
again,
have,
where do you take profit at? You're looking left to take your profits.
yeah,
And
you
if
definitely
in
look left.
futures case, if you have more than one contract, great, you can peel them off. If you don't have more
Mhm.
than one contract, then you're either going to have to be patient and hold it or just secure profit. And again, you're always going to leave something on the table, and that's okay.
Yeah, you can't pick every penny off the trade. There's many times where, I'll get off here, the next thing you know, it goes up higher. You can't be mad at that because, you gained some money right here. You didn't lose. So you just, count your blessings to what you have for what you have. So like in this case, if I was taking the trade going up, I go up, but then I look left, and see what may stop me right here. So while this is going up, I'm always looking to the left and I plan my exit strategy. So that's one thing you should have is a entry strategy and an exit strategy. So make sure you take note of that. Roxy, at some point, I think we should also review trading plans, so
Yeah, perfect.
I think it'll be really nice to see some examples of trading plans, so, and it's always good to include, maybe we can make like an outline of some sort of what's included in a trading plan, because as a new trader, your trading plan is basically your instruction manual of how you trade your strategy,
Yes,
from step 1, step 2, step 3, so we'll try
absolutely.
to include something like that on an upcoming video
Mhm.
or a
Hey
live
guys,
stream.
again, please post questions, members chat. Love to get some interaction. What are you guys wanting to see? Andy, can we jump to a currency pair? And we can go ahead and do
Sure.
6A, for example. Guys, that's odd USD. And let's just do the same breakdown on that one.
Do you want to go like USCAD or,
Oh, sure, that'll work. Perfect.
yeah, go like somewhere in here, so USD CAD right here. So, what did you want to see in here? Like just support resistance or?
Yeah, I just thought we could take a day and just do a
Okay.
little bit of the same support and resistance. There are a lot of people trading currency pairs. I
Yeah,
think they'd appreciate that.
yeah, that's fine. This thing's been moving pretty good right here. Wow, this has a lot of volatility in here. So yeah, this is pretty interesting in here. Um, so with this, okay, so we see price right here, 1 to 4 hour. So right off the bat, I'm just kind of going to the nearest points that really stand out right now to me are these guys right here and up on top. And this is a long way to go to the top, but I'm just going to mark off this area because price came up here and it went down. Okay, so from here I'll drop down to the 1 hour. Wow, these are really nice trades as you go in lower time frame. So right here, you got some really nice points. Like this one is really prominent because you've got a support and then you have a resistance area right here. So
Your
this is an
video's lagging
area.
again. Give it a sec.
Okay.
I don't want people to miss what you're trying to show.
Yeah. So are we good?
I'm not seeing it. Is there anybody else able to see his video?
Yeah, I think it's good.
Okay.
Yeah. Okay.
Yeah,
So
right, me too.
yeah. So right here you got a area of support, and then you have an area of resistance right here. So this is a really nice area where price can come up to this level again. Below we have this zone right here. So that'll be it for the 1 hour time frame. If I go down to the 15-minute, then we have more details to look at. So right here, you have another nice little area right there, because if you go straight left, you got it hits a whole bunch of so resistance, support, some resistance right here. So this is another area right here. Down below, you really got to go left to see if price is going to hit anything, but you really got to take a look way to the left over there. But if it starts dropping, then you need to check way to the left. But this will be good right here. And after the 15-minute time frame, then I would go to the 5-minute. And if you need to make like little adjustments or anything right in here, this is a good time to do it. So, right in here, you can have this peak area as an area of interest as well. Because if price does decide to go up, it's probably going to react to this little area right here. So that's how I would do that. So it's fairly simple. As soon as you practice this, it just becomes easier and easier. Does that mean every time you draw a support and resistance area, is price really going to stop here and go back around? No, we don't know that. For all I know, this can just shoot and just go straight up here. I don't know. I don't know what could happen. This can, from here, it can shoot up past this zone area and then, bounce off and then take off. We can do the same thing from the bottom side. We just don't know what's going to happen. But this is why we mark them, to kind of make us think ahead of time of what can happen. So be aware of that as you're trading, with your levels, and don't mark up every line, I think I used to see, support resistance areas. I would get DMs and people would have like a million lines like everywhere. It's I can't even think that way if I'm looking at my chart. So don't try to do that. Just have some nice major levels and some mid levels, and you're good to go. The rest is, you're basically using your indicators, trying to spot some divergences, and it just makes trading a whole lot easier once you have an understanding of price action and how the market is being structured throughout the chart and what's really happening. So next question. Anything?
I've
Any
been watching, and
questions?
there isn't anything in the members area.
Wow. It's either
Otherwise, chime
everyone's
in if you
paying
guys have a
attention.
microphone, please.
It's either I'm, having a lot of
Hi
interest,
guys.
or I'm putting somebody asleep here. So
Hi guys.
hello.
Hi. Hi. A question. Do you read the Heikin-Ashi candles, the price action on it, the same as the traditional candles?
That's a good question. So here, let's do that. Let me just clean this up. So there is a difference when it comes to Heikin-Ashi versus the traditional candles. Obviously, Heikin-Ashi really smooths out the price. Okay, so when you do have a downtrend, you notice a good strong Heikin-Ashi setup is going to look like this. There's no wicks at the top of the candles. Your wicks are at the bottom. So if there's smaller wicks, that's fine, because then you have and it's a wide candle, then you have a really good push to the bottom side. As soon as you start seeing wicks that are starting to form larger, maybe more than half the body of the candle, then you're coming to an end and price may start to reverse, or it could be a pause in the market. You start getting these like doji type candles. These are the more prominent candles of Heikin-Ashi, are these spinning tops or these doji type candles right here. So when you start seeing that, you have to start thinking, is price going to reverse, or is it just a little pause in the market, like consolidation, and then just continue with it, and then it's the same thing on uptrend. That's fine, like here, like this is a better one right here. You're not going to see, here you do have some wicks, but a good strong uptrend, you don't have wicks at the bottom. So this is what pushes, the price up with Heikin-Ashi. And once again, you still get rejection wicks, just like how you would get rejection wicks using traditional candles. The other difference is that Heikin-Ashi candles gives you the average price. Okay, so for instance, this is a live chart right here, and because this is, we're right into the Asian session right now. What's happening here is, if you are using Heikin-Ashi, you see that dotted line right here. That dotted line will always follow the current candle, the body of the candle, not necessarily where the exact price is at. As you can see what's happening here, I'm going to use this line here, for instance. So this dotted line is following the body of the Heikin-Ashi candle, but the actual price of this candle now is like right where my green line is. You know, there's a setting that's in here that you can have the actual price. If you go to your symbol and if you check this, show real prices on the price scale instead of the Heikin-Ashi price. So this right here is the actual price of the traditional candle, but it's showing it on the Heikin-Ashi right here. So right now the dotted line is on the body of the candle, but price is actually where this green line is right there. That's the actual price of where it's currently at. So, and I'm
Can I
just
jump
so
in real
used
quick?
to,
Yeah.
yeah,
I would say you're so used to looking to the right there to see the price. When you're starting out with Heikin-Ashi candles, best thing I can recommend doing is splitting the screen and bringing up
yes,
regular candles so that you can watch and use the Heikin-Ashi to give you the overall structure of the market, how it's flowing, the strength of the trend, that type of thing. I guess you're in a trade right now. Anyway, sorry, just noticed that. Anyway, but basically you can have it show you what the regular candle price is, especially if you're used to seeing those candles. And you can just match the time frame, and then you can watch that and watch the Heikin-Ashi candles. And over time, you'll get more used to how the Heikin-Ashi candles formed, and using that and being able to read that. But to start out with, just split your screen and look at it that way.
yeah. This one actually, I'm on a paper trade. I closed my account, but
Okay,
I
good.
just
I was
wanted, I
thinking,
just, yeah,
wow, I hope
yeah,
you're not in a trade
no,
in the middle of
no,
this.
no. I wouldn't be doing that right now. I'm on paper trading, and I just like to at home sometimes, while I'm eating dinner or something, I practice and I don't really pay much attention. So I just like to see what's really happening right here.
But that looks
But
good.
that does look good. I'm following the trend over here. So these were just like the contracts that I just had set on, but this is just paper trading right now. I just like to see where
So
I'm
can
at.
you show them real quick, just to finish that off,
Yeah,
the
that's what
regular
I'm
candles?
I'm
Oh,
trying to
sorry.
find USDCAD right here. Yeah. And let me go to the regular candles. There we go. Oh, I guess I gotta fix something here. Okay, that's all fixed. What's happening here? Maybe it's from something here. No. Ah, here we go. This. There we go. These were like the colors I'm at right there. And this is usually a little bit darker. Lighten those up a little bit. There we go. So this right here is a good example of traditional. And so, okay, let me go to the same time frame. I'm on 15 minutes here. Let me go to 5. There we go. So there's real consolidation right over here. As you can see it. So, I mean, you can see it's got the same price, but you can see the difference in how the candles are actually moving. Here, price on traditional candles is actually following the candle itself, whereas in Heikin-Ashi candles, the price right now is right where my crosshair is, the horizontal. It's right where the EMA is right there. You see that? So I'm very familiar with it from right here, and you can see how it's like just jumping around. So this is a really good way if you really want to see how price moves in comparison, you know, or if see the difference between Heikin-Ashi and standard traditional candles. It's just really interesting to watch. If you really want to see a show, you should do this at the opening candle, you know, because in price you will get the big bars that'll form or some large wicks. And over here, you're going to get a bar that's just going to be very short, but this price is going to be shooting really high in comparison to how the candle looks. But as you get used to this, you just notice where price is on your Heikin-Ashi candles, you know.
Yeah,
And then
sometimes the
you
wicks
know,
on those can be unreal.
yeah, this is so interesting. Yeah. Yeah, this is very interesting right here. You know, but just in general, you know, we can like, you know, oops, really zoomed out over here. So see like the difference right here. It's not too bad. You know, it's just really wicky over here, very wicky over here, you know, but you do see like a difference in how things are transitioned from Heikin-Ashi to traditional candles, you know. You just really have like a really nice smooth line. You know, I mean, this is nice and smooth too, you know, but just eliminates a lot of this noise, you know, as it just comes down and then it moves back up and it comes down. So this is why
So,
I'm just so attracted to the Heikin-Ashi candles.
so quick question: how do you trail your stop loss on that?
I do it manually, you know. So let's say if I was okay, I trade a little bit differently, like when I do my stop loss. Like let's say I'm getting in on my trade right here, okay? If I'm getting in on my trade right there, and let's say this represents my stop, okay? So what I do is when I first, this is how I do it, okay? So nobody do what I do. So no, I'm just kidding. So when
Okay,
I enter a
but
trade right
reality, I'm just going
here,
to stop you right there. Reality is you're an experienced trader, so what you're
yeah,
recommending may be a
what
bit
I'm
more
recommending,
experienced take on it
yeah,
than what
yeah.
somebody beginning should do. So,
So right here at the bottom of this wick, you can go down a few pips right there. That's where your stop loss should be. Okay, and as price starts to move up, you know, on trading, I trade off a trading view. I can connect with my broker right on trading view. So, and you can manually move the the stop loss. So as price is moving up, you know, I'm following with it. You know, so I kind of give a good distance. So as price is moving up again, you know, like if this here represents price, you know, if price is like right there, I'm going to be like right there. You know, if price continues to move up, then I'm going to move my stop up with it. You know, so at this point, you know, I'm past the break even stage, you know, and I'm in the money right here. So if my target is this 144, then that's fine. You know, as it gets closer, I'll move my stop up even more, you know, and then if it hits it, then it hits your take profit. But I manually just move it. I just kind of gauge what's happening right here. So, because you never know when there's going to be a news report or something, and then, you know, or a big spike's going to come down, it'll just take you right out. So you just want to be prepared for all of that.
and I trade
So
directly on TradingView as well. I use limit orders for my take profit, so that basically I mark it in to get in for a price, and then I will right click and hit a trade, and then add a limit order at the target zone to peel off a contract. So right there on the right click trade.
right there,
Yep.
you do like your buy limit or your sell limit right here.
Yep. Absolutely. And you can do a stop in order to put your to protect it, to use your as your stop loss.
Yeah.
Otherwise,
Yeah.
yes, you can absolutely do the right click on your entry and say protect, and that'll allow you to add a
So
stop loss and a take profit as
yeah.
well.
So for instance, here, if I, I'm just going to hit buy right here. Okay. Protect position. So right here, you can do, your stop loss, and your take profit, and you hit modify. See, and then you can move it, you can reset it right there, and it took take profit all the way up there. So you can set these. I can set these right on trading view right here. So for instance, as price moves up, then as we were saying, like right here, let's say if we were right here, as price is moving up, then I can just follow along, as price goes, and you know if you got your take profit, well, I think I just stopped myself out. So, but you get the idea right there. That's how easy it is to do it. So, yeah. Does that answer that question about the Heikin-Ashi and traditional candles?
Yes, perfect. Perfect. Thank you very much. But you just mentioned one other thing that's quite interesting is that you trade off TradingView directly.
Yes.
The thing what I understand actually is that the brokers that offer that have actually TradingView connected to one of the other systems, for example, CTrader or a MetaTrader.
Mm-hmm.
By using TradingView, do you notice perhaps some more slippage because there is a little bit of a delay, or that doesn't really matter?
Well, I don't really notice much. I don't really pay attention to that. Roxy, do you pay attention to that or?
I do actually, because I have two
Yeah.
different platforms I can trade on. So I also have a Ninja Trader account, and because I have a live data feed from my broker through TradingView, I am getting live data through that. So I actually haven't noticed any real slippage. I also don't have slippage in, I trade futures. So when I mark it in, I'm getting the price. I'm not getting the price plus um, the, I'm sorry, God, the term is escaping me right now. But anyway, your guys's, your pips, the amount of pips that you would have in Forex. Sorry, when trading futures, you're getting a contract and then you're going by ticks and points and ticks. So what I get there when I mark it in is whatever the market price is at the time. And if I put in a limit order, it typically fills at that limit order plus or minus like a tick, typically, unless it's really flying through. So I don't
Yeah.
really notice a lot of that, and that might partly be because I'm getting a live stream from my broker right on
Yeah.
TradingView.
I mean, right now this is a live account right here. I'm not trading live, but this is live data feed. And right now the spread right here, you can see it is 2.1, so it does change
Did you pay
right
for the
there.
live data for Forex? Because it can be a bit delayed in that case. Because we
Um,
get something for our broker through CME for
oh,
that
I
data.
see. Yeah,
Yes.
I don't have, so this one might be delayed, my fault. Yeah, because it is Oanda right here. So
Yep.
I have CME. So this is probably a little bit delayed if somebody's looking at their chart on their computer, but this right here is the spread, so they always mark it right between the buy and the sell buttons on TradingView. This is where you know where the spread is at, just in case anyone's wondering. So, uh,
But you can pay for live data on TradingView.
mhm,
It's just a
yeah,
little monthly add-on there.
yeah, and that's what I have is live data. So
But
this is the
typically, your
live
broker
data
can
feed.
give you a live data feed if you have an account. So
Yeah, yeah. So
hopefully that
this
answers
goes
your
right.
question. I know Daniel had one. Daniel, you want to chime in?
Yeah, not a strictly a question. I just wanted to show some appreciation. Thank you, Hogs. Thank you, Roxie. You do a tremendous job in your charts. I think this is a great strategy in the sense that it works through different pairs, instruments. That's not so usual, at least to me. So yeah, basically show some appreciation. Thank you for sharing it so openly with us.
Oh, our pleasure.
Exactly.
Thank you.
Happy to do so. So Hawks, you got a shout out from DTX. He said the pattern that he was pointing out earlier on USD JPY is breaking out, and it was a triangle.
That was that triangle. It was like an ascending triangle, wasn't it? I think it was.
Yeah.
Or yeah, I remember that pattern. That's pretty cool. Finally broke out. Awesome. Let's see. Let's see where we're at over here.
And yeah, guys, I did have a little bit of difficulty in initially recording, but I've got the last hour and a half, so most of this will be available.
Yeah, this is fairly interesting right here. This is a lot of fun. Anyone have any other questions?
Yeah.
We can look at another pair, charts, anything you guys want.
Anybody want to chime in? Happy to look at something else.
Yeah. Nice
No, guys,
divergence.
I just want to thank you guys very much. But you just mentioned how long this was, and I realized I've got to go to bed.
Oh.
Well, we appreciate you guys stopping in. Thank you. We understand this is many different time zones.
Yeah, many
Exactly.
different time zones, you know, so appreciate
It's
all that.
You're
Well,
very welcome, and I am sure that we'll be doing another one again.
yeah, we'll
okay.
do
So
another
Hope so.
one in the
yeah, if you
future.
guys have
So
requests, drop us a line either through DM or on the members chat, and let us know if there's something you want to see next time as well.
yeah, for sure. You know, so that's really great. But yeah, so I
So
think
can you drop
this
the 1 minute
probably
while I'm waiting to see if we
yeah, let's go down 1 minute.
get anything. So if you go to this morning on the 1 minute.
Okay.
You're having to, sorry, fight your way backwards here. It's a lot of candles.
Yeah. Here we
So
go.
there,
This
so
is
what I was going to
the
point out is there
start.
was a little bit of a wedge here. So on the bottom side, when it dropped down and bottomed out there was a little bit of a flat bottom and then a top
Oh yeah.
upper wedge that formed there. And then you can see that it spiked out of that and moved right back up to the same zone.
Yeah, that's yeah, no, it's exactly nice little wedge right there. Little wedge pattern. Yeah. That thing just came right up right off of that. So yeah, you can see price just bounces up. You know, it's very strong. These wedges and pennants, you know, if you find them, you know, these are very, very powerful. You know, it's got like a really big breakout right after that. So that's pretty cool. That's really nice on the 1 minute. Yeah, you find these everywhere. It doesn't matter the time frame, 15 minute, 1 hour, 4 hours. Obviously the 4 hour is gonna like take forever to form that
So again,
triangle.
and then I'm going to move you right to the middle of your screen there. Nope, over the right slightly. Okay, red zone right up in the middle. You've got a head and shoulders, and I just want to show you guys that.
Oh yeah.
So these happen on any
Right here.
time frame.
Yeah, here we go. You got the left shoulder right here. You got the head and you got the right shoulder. So this is perfect right here. See that? And then just reversal pattern. Just going right down. It's like another little mini one right here. You know, so yeah, just once you train your eye to find these things, you know, it just makes it so much easier. I remember like when I first started, I was so intimidated by these candles. I don't know what the heck I was doing, you know, and then you spot these patterns, you know what what to look out for, and then it just makes trading just so much easier, you know, but that takes time. It's not an overnight thing, you know. This takes months to to build this, um, you
It's
know,
all about
in
the
you and stuff.
practice.
You know, it's really all about the practice, you know, so
I
take the
call it my three
time, you know.
P's: practice, patience, and persistence. This is
Ah, there you go.
absolutely a journey. It is not a race, and you will pick these up with practice.
Yeah, it's when you're trading, remember, you got to treat this like a business. You are your own boss. You don't have to impress anybody. You just need to impress yourself by understanding the process, you know. So take the time to do it. Don't rush into these trades. Don't, you know, just don't. It's it will kill you because this market just wants to take your money away from you. So when you trade, you just got to be very peaceful. You got to be very calm. And you know, when that happens, you know that you are good to trade. You know, don't sit there and put in a trade thinking, oh, you know what, I don't know if I should have done that. Well, now it's too late because you're in a trade. Get out right away before you lose any more money. You
And when
know,
you're
make
starting out,
sure,
don't
yeah,
don't anticipate things. Wait for it to happen. Wait for it to show you to commit. And the other thing is, you might sit out a couple trades, and then the one you jump in on might be a loss. It is going to happen. The statistical nature of it is, though, with this strategy and the way that it flows following the market, you will get more trades, and it will be in your favor when you have taken the time to draw out your support resistance and follow what the indicators are showing you. Build your confluences.
yeah. Now
Hey,
I did mention,
Hawks.
Yeah, go
yeah,
ahead.
Uh, sorry, I just jumped in here. I kind of started. I didn't get hear you guys from the beginning. Did you change the settings on the two indicators on the LMI and the TSI, or do you use the or are you using the default ones?
right here. I do change the settings. If you can see right here on the LMI, I use the old LMI. These are my settings for it. You know, it's the 1.15 and the delta is the 10. Okay,
Yeah.
and the TSI is the 613.4. That's what I use. You
All
know,
right.
and I also use the TDS. You know, it is the standard default settings. You know, the delta period and the R value, if you notice, they are the same as the LMI, 1.15 and 10. You know, so, and then I keep the candle colors the same as my Hakanashi colors. So reason I do that is that it just fills in the colors from TDS. So, you know, where there might have been like a blue, I mean, you will get your occasional like, you know, blue candle, but there could have been another one here. So see if I turn off TDS, you see that? Now you get like more blue candles.
Oh, okay.
So if I leave that on, you know, now it just makes a nice smoother transition. So the reason I like the TDS to the settings that I have and how Taylor, you know, put this is that the color changes at the same time as your LMI changes too. So it goes from yellow and then it goes to blue, you know, representing my down, you know, and then at the same time, your LMI changes right there too. See that? And then even going up, you know, it's your color changes also. You see that? It's turned, your LMI has turned green and this has turned yellow going up. So this is why I like to use the TDS also because it just kind of keeps the colors in tune with the LMI. So
Okay, we had another question, and I do want to point out just beyond that, the next high point there was a divergence that's a bearish divergence. So right to the right of your dashed line. So there's a bearish divergence, but it did not play
It
out.
didn't take.
Yep.
Yeah,
And that happens
right
on a
here.
strong uptrend. I just want to emphasize that again. Divergences are wonderful, but
Yeah.
when you're counter trend trading with them, I'd be cautious. And initially, I wouldn't take those. Trade with the trend. It is your friend. So you did have a question. Revoke asked, as the price really starts consolidating, bouncing around both sides of your moving average, besides just the indicators, what would you use as a confluence that you're truly rejecting off in either direction, whichever it may finally decide to go? Sometimes indicators can jump back and forth quite a bit. Would you just wait for true new trend to fully start forming? What would you use?
Yeah, well, okay, because I like to trade the New York session, so there is some really good volatility, as you can see, through here. It does move up. I know when we get into the Asian session past 15 o'clock, that's when the New York session ends. This is when I stop trading. But this could have happened, within the New York session at times. So, it's kind of hard to spot at first what's going to be happening. One indication that I do have is if I'm on my TSI, when the bands are just going horizontally, kind of like near the zero line, that tells me that there's not much movement over here. So I kind of look at that as an indication to I'm not going to trade. So something that you could do is, if you want to escape consolidation, is when you draw, your straight line, down through here, let's say, and wherever it breaks out from, that's the direction, your trade is going to be going to. So, you can do these parallel lines right here and just kind of monitor and just wait. And even if it does break out, don't take the trade right away. Just wait until it goes the other direction. Sometimes these
Break
little
and retest.
breakouts can,
Yep.
yeah, they can be even like fake breakouts. They can fake you out. Like this could just jumped up and then the next candle could have went down the other way. So it's a little tricky to do these little breakouts sometimes. So just be very cautious. There's a lot more opportunity to take that trade. I know you in here you're waiting for a long time. So as soon as you see that break, or it kind of like triggers something in your brain, it's like, oh, gotta hit that buy button. So it's just like relax, and wait until the next trade opportunity. So that's how I do it. It's really hard, to distinguish when a consolidation is going to take place. When you start seeing, 4, 5, 6 candles in a straight line like this, then you know what? Maybe it's time to get out of the trade if you're in it because something could be happening. In hindsight, it's like, yeah, I would never take this trade, but how do you know this is going to happen if, you're like right over here? So you just, there's really like no clear indication other than seeing these candles just side by side, then you know what? You may want to get out and pay attention to the time frame that you're trading. I know that once the market closes, things pretty much consolidate. So I know I don't take trades in here. Taking a trade during market hours is something totally different. If there is a consolidation, like right here a little bit, I know it's just going to be for a short time frame and nothing more. Then it's gonna, you're gonna get a trend. After market hours, then you're gonna get stuff like this. So that's how I see it. Yeah, so I think right now, guys, we've been on for quite a while, so it is getting a little bit late for a lot of you too. So I just wanted to say thank you very much for joining the live stream. We'll do another one in the near future. And once again, I'd like to congratulate Roxie for being our new market legend. So
Thank you, Andy.
You're welcome. She does great work with her charting and answers a lot of your questions. So make sure you stop by on Discord and say hi to Roxie later on tomorrow. So for now, I think this, this is a good time to end right here. So we'll see you guys on Discord.
Yeah.
Thank you,
for
guys.
joining
Thank you
us.
again.
Thank
Sure.
you, Rox. Thanks, Roxie.
Thank you.
Yeah. Take care.
Cheers.
Thanks, guys. Really.
Yep.
That
Sure.
helped a ton.
No
I'm glad to
problem.
hear that. Awesome.
I was definitely one of those people that were sitting there putting way too many support and resistance lines up, and I knew it, but
We have all been there. Absolutely.
I've been there too. So don't sweat it, man. So all right. We'll see you.
Have a good night.
Yeah. Good night, everyone.
Good morning. Good morning for us in Melbourne. Thanks, Fox. Thanks, Roxie.
Oh,
You're
good
welcome.
morning.
Good morning.
Yeah. Enjoy your day.
Yeah, there you go.
Thanks. Cheers. Bye.